Right now, earnings are in focus. It's a busy week for bank and financial services earnings. Citigroup reporting earlier a double beat, $17.26 billion in revenue, $1.28 adjusted earnings per share. Also reporting later in the week, Bank of America, Morgan Stanley, American Express, SunTrust, and Goldman Sachs. Joining us now is Vertical Group research analyst, bank analyst Dick Bove. Dick, Citi was a $22 billion hit on this tax reform. You warned our viewers. You said, listen, this is going to be a quarter where it's like kitchen sink time with these tax changes. But what do you make of these results?
Yeah, no, I think that's exactly what's happened. The hit on the taxes is due to which is complicated, something called deferred tax assets, and they have to be written down when you write down, the tax rate, and that was a $20 billion hit. Also, Citigroup has to pay 15.5% on its foreign earnings, which it did presumably in the quarter. And, in answer to a question that was asked earlier, they're not going to repatriate 5 cents. All that money that they have overseas is going to stay overseas. Secondly, again, it's hard to analyze this quarter on face value because I think that banks are throwing everything into this quarter that they can. But if you do look at it on face value, it's a terrible quarter. I hate to tell you that. Their net interest income is down quarter over quarter. Their revenues haven't gone up over the past year. Just about every revenue category that they have has shown a decline on a quarter over quarter basis. Their expenses are flattish, so they have negative leverage in the quarter. Their loan losses went up. Their net interest margin went down. This company actually showed a decrease in the yield on its loan portfolio in the last quarter, despite the fact that interest rates have been going up continuously since the fourth quarter of 2015. I would say that, again, face value, if they're not fooling around with the numbers to make themselves look good in 2018, face value, this was a terrible quarter.
Dick, I want to break down this $22 billion charge in a little bit more detail. You say this refers to deferred tax assets. So my understanding of what's going on here is Citigroup had a lot of losses in the past. Losses are related to the financial crisis, and they're allowed to basically use those losses to hold down their tax bills in the future. And it seems to me what's going on here is because of the tax cuts, those assets are worth a little bit less. Can you explain, is that what's going on here? Is that why they take this $22 billion charge?
Yeah, you're exactly correct. In other words, if you have a 35% tax rate, 35% of those losses get to be written off in the future. If you have a 21% tax rate, then only 21% get to be written off. So you've lost 14% of what you would have written off, which in the case of Citigroup was $20 billion. And, it therefore means that the equity in the company is less than we had thought. So it's a negative hit. It's a one-time event, but it's not at all positive. So the other negative element.
Does that mean that this tax bill is bad for Citigroup, or does it mean it's good for Citigroup? We're talking about tax cuts being helpful to banks, and then we see them taking all these big write-downs. How do you square that?
Well, because, basically, this is a one-time event. The tax bill will be very good for Citigroup, and it will be very good for, all American banks because, they're showing dramatic decreases in the expected tax rates that they're going to pay in the future. In other words, companies like Bank of America, Wells Fargo, PNC, where I've seen them show what their predicted tax rate is going to be, they're cutting their tax rates by about 10%. That's a huge increase in their earnings, and that's not a one-time development. That's something that's going to be with them, hopefully, for many, many years. So, no, the tax cut is very positive for the banking industry.
And that's what the CEO, Michael Corbat, said. Tax reform not only leads to higher net income and increased returns, but also serves to strengthen our capital generation capabilities going forward. Is that why, despite this, as you say, Dick, terrible quarter, stock's up almost 3% right now in the pre-market?
No, I think that that's exactly correct. And I think that, if one wants to forget this quarter, which I think they should, I think I said last week on the program that, this quarter is ancient history. You shouldn't think about it. You shouldn't look at it because there are going to be too many one-time adjustments which will obscure what is really happening with the company. If you look into 2018, 2019, what you're looking at is, we've got a new tax regime, which is extremely positive for every bank. We have a change in monetary policy, which is going to be significant and is going to drive interest rates up, not just for a quarter or a year or two. When you change the direction of interest rates, they go in that new direction for 25 to 30 years. The other thing which is new is regulation has been basically, I'm going to say, wiped away in many cases in the banking industry. And so that's an extremely positive event. And despite the fact that people don't seem to understand it, technology in banks is far superior to that in most other areas of the economy. In other words, if I were to ask you the question, who has filed the most patents on blockchain or distributive ledger, which is what allows cryptocurrencies to occur? Is it Google? Is it Apple? Is it Facebook? Is it Bank of America? It's Bank of America by far.
Get down.
So
that's awesome, Dick. That's good information. And
but the point.
I'm making a list. Tax reform equals a benefit to these banks, a stronger economy overall, which is a benefit to the banks, monetary policy, benefit to the banks, less regulation. Story in the New York Times today that Democrats in the Senate, moderate Democrats, are getting ready to join Republicans potentially on legislation that would reverse parts of Dodd-Frank. This is a major, major tailwind. Final word.
Yeah, everything you're saying, Dagan, is what you should be focusing on. Forget this quarter. And forget it for every one of the banks, because the banks are fooling around with the numbers, if I can put it that way, kitchen sinking it, if you want to put it that way. Just don't look at this quarter. It is not relevant to where the banks are going in the next couple of years. What you said is relevant. What you're saying is important. What this quarter shows is not important, and it was a terrible quarter.
Dick, great to see you. Thank you so much, Dick Bove, as always.